Hi everyone, pull up a chair. This one's personal because yesterday the market did the exact thing that burned me once before, and watching it happen again told me more about myself than about the chart. Every stock has a story, but some stories are really about the person reading the tape. This is one of those. Let me take you back to 2022. The NASDAQ had been bleeding for months, then it came down to its long-term trend line. The one-line ID told myself never panic at, and panic is exactly what I did. The candle undercut the line, the headline screamed crash, and I sold. I even got short a little because getting scared wasn't enough. I had to prove I was right about the doom. The line held. Of course it held. The market bounced hard, and it did it without me. I watched a 15% rip from the sidelines, convinced I'd been smart, knowing I'd been a coward. That is the scar, not the loss. The flinch. Ivy told you before, a scar is not a wound heals. A scar changes how you read the next chart, and yesterday the tape handed me the same setup. Both the NASDAQ and QQ dropped to their long-term line. Both poked just under it intraday, both closed back above it. If you'd shown me that candle in 2022, I'd have been reaching for the sell button before the close. This time, I did nothing. I watched the line get tested. I watched the reclaim, and I made exactly 0 trades. The scar finally paid for itself. Here is what I actually saw, and why it is not the same as a bottom call. When an index undercuts its long-term line and reclaims the close-on heavy volume, that is a shakeout. Weak hands get flushed. The people who bought the top finally give up, right at the level that matters. That is not distribution. That is the market clearing its throat before it speaks. But, and this is the part the 2022 version of me never understood, the short-term line is still overhead, price is below it. So this is a bounce off a line that held. Not a reversal, not yet. The line in the sand is simple. If we close back below the long-term line, the bounce failed and I was right to be cautious. If we reclaim the short-term line, the repair rally is real and I get interested again. Until then, I wait. And that is the whole lesson. The one I wish I'd learned a decade earlier. The long-term trend line is the one place I get interested, not the one place I get scared. The undercut is the test. The reclaim is the tell. The people who sell there aren't wrong about the risk. They're wrong about the level. They confuse a shakeout with a breakdown. Structures don't break in one session unless they were already cracked. This one wasn't. So where does that leave you, sitting at home wondering if the bottom is in? I tell you it is. I don't predict. I prepare. What I'll tell you is this. The broad tape just showed you it has a floor at a level that matters, and it defended that floor with volume. That is data. The rest, whether the bounce becomes a rally, is something the tape will tell us, not something I'll guess for clicks. The 2022 version of me would sold the undercut and shorted the reclaim. The version sitting here now, I read the line, I checked the structure, and I stayed in my seat. That is enough for one session. The discipline cost me nothing. The fear used to cost me everything. The long-term line is where I get interested, not where I get scared. Write that down, because the next time the market tests you, you'll want to remember which one you are. Every stock has a story. This one's about a line that held, and a trader who finally did too. If this story changed how you read a pullback, I'd love to have you back. And next time, I'll show you the exact level that turns a bounce into a rally and the one that ends it. See you next time.